One of the most effective ways to grow your wealth is to let your money work for you. This can be achieved by taking advantage of the power of compounding, often touted as the eighth wonder of the world. Simply put, compounding is the process of reinvesting the income earned on investment rather than having it paid out, thereby creating a larger base upon which future returns, a capital growth and income, can accumulate. So in this video, we are going to tell you about the most powerful way to compound wealth. The video is going to be amazing, so make sure you stick to the end. Unit trust funds earn income in the form of interest or dividends received from the fund's underlying holdings, bonds or shares. While virtually all the income earned by single asset class funds will be either dividends or interest, multi-asset class funds such as the Prudential Balanced Fund earn a combination of both interest and dividends. When you complete an investment application for a unit trust, you are given the option of having the fund's distributions either paid out to you as cash or reinvested back into the fund, where additional units will be purchased at the prevailing unit price on the day of reinvestment. To take advantage of compounding, you need to choose the latter. Day trading can turn into a lucrative career as long as you do it properly, but it can be challenging for novices, especially those who don't have a well-planned strategy. And be aware that even the most seasoned day traders can hit rough patches and experience losses. Day trading means buying and selling a batch of securities within a day or even within seconds. It has nothing to do with investing in the traditional sense. Day traders are typically well educated in the minutiae of trading and tend to be well funded. Many of them add an additional level of risk by using leverage to increase the size of their stakes. Day traders are attuned to events that cause short-term market moves. Trading based on the news is one popular technique. Scheduled announcements such as the release of economic statistics, corporate earnings, or interest rate announcements are subject to market expectations and market psychology. That is, markets react when those expectations are not met or are exceeded, usually with sudden significant moves which can greatly benefit day traders. The profit potential of day trading is an oft-debated topic on Wall Street. Internet day trading scams have lured amateurs by promising enormous returns in a short period of time. Some people day trade without sufficient knowledge, but there are day traders who make a successful living despite, or perhaps because of, the risks. Increase the difference between your income and expenses. Save that difference and grow it exponentially over time. Before we move on, support us by hitting subscribe and the bell icon to get notified when we post new videos. Now let's get back to our topic. Rather than getting rich over time, they just stay afloat decade after decade, moving through life spending as much as they make. At most, they build a small nest egg and rely on the government or a pension to support them in retirement. Many professional money managers and financial advisors shy away from day trading. They argue that, in most cases, the reward does not justify the risk. Moreover, many economists and financial practitioners argue that active trading strategies of any kind tend to underperform a more basic passive index strategy over time, especially after fees and taxes are taken into account. Individuals who attempt to day trade without an understanding of market fundamentals often lose money. Working knowledge of technical analysis and chart reading is a good start. But without a deep understanding of the market and its unique risks, charts can be deceiving. You can think of day trading as playing a professional sport. Your ability to make money is based 100% on your ability to perform day in and day out. Attempting to day trade without any sort of training or education is a recipe for disaster and loss of capital. The first step to learning day trading terminology and technical analysis is reading books and watching videos. This is the process of gaining knowledge. But remember, just because you read a book on skydiving doesn't mean you're ready to jump out of an airplane. One of the challenges with learning to trade is the overwhelming amount of information out there. Oftentimes, the things you learn will be contradictory. The reason is that the technical analysis or entry and exit requirements that work for one strategy may not work at all for another strategy. It's not helpful to your long-term success to learn a little bit of 100 different strategies. It's much better to learn as much as possible about one strategy that is proven profitable. As an aspiring trader, you have two choices. You can either adopt a strategy already being actively traded by other traders, or you can create your own. If you create your own, be prepared to spend months or even years backtesting and refining before you can trade with real money. Most beginner traders, rather than trying to reinvent the wheel, decide to master a strategy that's already been proven profitable. After mastering that strategy, traders may decide to put their own spin on it by making a few changes. Regardless of your approach, it's important to have a specific setup. trading system, or methodology that you're comfortable with when you start trading. So that's it. Please like, share, and comment with your thoughts below if you like this video. Remember to subscribe to see our next video. Stay safe, and we will be back soon with another video.